$72,000 a year. That's what Marcus earned in 2026. More than the national average. More than most people his age. So why was he completely broke? This is the story of a man who did everything right and still lost. Before we dive in, let me be clear. This case study represents real financial patterns and real-world data from 2026. The numbers you're about to hear, they're not exaggerated. They're average. And that's the terrifying part. Because if Marcus is average, then millions of people are living this same nightmare. So let's start from the beginning. Who is Marcus? Marcus, 28 years old, college graduate, marketing coordinator at a mid-sized company in Denver, Colorado. Salary, $72,000 a year. That puts him solidly in the middle class, right? According to 2026 data, middle-class income in America ranges from $60,000 to $180,000. Marcus is safely inside that bracket. After taxes, Marcus takes home about $4,800 per month. On paper, that sounds decent, livable, maybe even comfortable. But here's where the story gets interesting. Because in 2026, taking home $4,800 doesn't mean what it used to. Let's break down Marcus's life. Rent for his one-bedroom apartment in Denver, $1,950 a month. Now, you might think that's high, but in January 2026, median rent in major U.S. cities jumped 7.9% from the previous year. Marcus's rent, actually below the Denver average. Groceries, $520 a month, not eating out much, just existing. Eggs, bread, chicken, rice, the basics. Car payment and insurance, $580. Student loan, 3 tenders. Utilities and internet, $215. Phone bill, $85. Health insurance through his employer, $180 out of pocket. Gas for commuting, $200. Add it all up, and we're at $4,040. That leaves Marcus with $60 a month for everything else. Savings, emergency fund, going out, living. $760 for an entire month. That's $25 a day. Does that sound like middle-class wealth to you? Here's what nobody tells you about 2026. Inflation officially sits at 3.8% globally. Sounds manageable, right? Wrong, because that number hides the truth. Rent didn't go up 3.8%, it went up 7.9%. Food, up nearly 5%. Healthcare, over 6%. The things you actually spend money on, they're rising way faster than the official number. Meanwhile, Marcus got a raise this year, 2.8%. His boss called it competitive. But here's the math. If your costs go up 6% and your salary goes up 2.8%, you're not getting richer. You're getting poorer. In fact, data from 2026 shows that real wages adjusted for inflation have barely moved for middle-class workers in over 50 years. Marcus is earning more dollars, but each dollar buys less. And that $760 left over each month, one car repair, one medical bill, one unexpected expense, and it's gone. But wait, it gets worse, because there's a type of inflation most people don't even notice. Stealth inflation. Subscription services that quietly increase by $2 every few months. Insurance premiums that creep up every renewal. Fees, and more fees. Marcus calculated that in 2026, these small increases cost him an extra $1,200 for the year. That's $100 a month, just vanishing. So that $760 for? It's really more like $660. And on some months, less. It was March 2026. Marcus checked his credit card statement. $2,800 balance. He'd been carrying it for 5 months. Interest rate, 22.4%. That's the average credit card rate in 2026. Every month he paid $200 toward the balance, but $52 of that was just interest. He was working full-time, making decent money, and he was trapped. Total U.S. household debt hit $18.8 trillion in late 2025. Credit card debt alone, $1.28 in trillions. Marcus wasn't alone. He was average. And that's when he asked himself the question that changed everything. What's the point of a salary if it doesn't actually cover life? Marcus didn't have a dramatic solution. He didn't win the lottery. He didn't start $1 million side hustle. He just woke up. He started tracking every single expense, not just the big ones, everything. $4 coffee, $12 lunch, $8 streaming service he forgot he had. He realized he was spending $340 a month on things he didn't even remember buying. Convenience, impulse, distraction. He cut them, not all at once, but slowly, ruthlessly. If it didn't serve a purpose, it was gone. He refinanced his car, saved $80 a month. He switched insurance, saved another $45. He called his internet provider and negotiated, saved $25. Small changes, boring changes, but they added up to $490 a month. That's $5,880 a year. 6 months later, Marcus had paid off the credit card. 12 months later, he had $3,200 in an emergency fund. Did he get rich? No. Did his salary suddenly become enough? Not really, but he stopped drowning. And in 2026, that's a win. Because here's the truth. The system isn't designed to make your salary feel like enough. Housing costs are rising faster than wages. Inflation hits the middle class hardest. And nobody's coming to save you. But Marcus learned something critical. You can't control the economy, but you can control your response to it. So what can we take from Marcus's story? First, your salary isn't the problem. The gap between income and cost of living is. Second, if you're feeling broke despite earning decent money, you're not failing. The math is just broken. Third, the only way out is awareness. Track your money. Know where it goes, because what you measure, you can manage. And fourth, small, boring decisions compound over time. Cut $10 here, save $20 there. It doesn't feel like much, but it adds up. Marcus still lives in that one-bedroom apartment. He still drives that same car. He still earns $72,000 a year, but now he's not scared every time he checks his bank account. So here's my question for you. How much of your salary actually belongs to you? After rent, after debt, after all the costs that keep rising faster than your income, what's left? And is it enough? Because in 2026, earning a good salary and living a good life aren't the same thing anymore. Marcus figured that out the hard way. The question is, will you? If this story hit close to home, you're not alone. Drop a comment and let me know what percentage of your salary actually feels like yours. And if you want more real financial breakdowns like this, you know what to do.